Okay, Sean here, back again after at least a 2-week hiatus. Sorry about the absence, but had bigger fish to fry. So let's see where we're at. I will go over the just basically the overall market, just the way I've been seeing things over the past couple weeks. So without further ado, let's take a look at the start off with the S&P. So right here, sorry for the confusion here with all this levels and all that, but I'll go over that. As you can see, we had a pretty decent down week. Basically started the week off down and really just got some volatility back in this market, pretty good, and it wasn't even a easy basically to stay short this market, because there were some days in the middle of the week that it almost smelled like they were going to take it higher and really squeeze the shorts, and they did actually squeeze the shorts intraday a few times. So but Friday definitely showed the direction, and Friday, usually is one of those days that you look from how the week's been, and Friday sort of becomes that microcosm of the week. And even though Friday looks like it was just a straight down, it was actually this is the SPX, and it was actually a down open. They actually took it up and then brought it back. So again, sort of a microcosm of how the week went, with that a lot of intraday volatility. Just a key here, though, after this impressive run since the lows of October, market broke a pretty key level here. Basically the low from 2 weeks ago, roughly around 20.50 in the cash, and I think that was the level that you needed to hold support if you were a bull. Definitely the level to lighten up substantially any short-term positions, and probably gave the bears a green light to start getting short. Broke a lot of these short-term moving averages, and the rest sort of right now is history. So going into the next week and the S&P, I think there should be some support here in these prior highs. Basically from the summer or early fall, we should see some support around the 2000 area, which we're practically at right now. We're at 2002. So a breach below probably isn't out of the cards. 38% retracement is roughly 1980. And I think the 50 days somewhere down in here as well. So something that some technicians will be looking at is that 50-day for some maybe lasting support, or at least some sort of level to bounce off of. Of course, we have the Fed this week, so that throws a little a wrench into the works, if you will. I mean, I've learned that for me, the Fed week is usually not a good week, and it's best for me to stay away, because it does bring a bit of volatility that usually is not conducive to my type of trading. So as far as the oscillator is concerned, it's definitely RSI is way overdone here. So this is basically subscribing to a bounce, relatively short order. McClellan oscillator is starting to get down to these boundaries as well, to be somewhat over, I hate to say oversold, but a little overdone. So also sort of looking for a bounce potentially here. And ideally, I'd almost like to see it kind of stay weak into the Fed, on Wednesday, and then maybe get some, have the bears get what they want, whatever it may be, out of the Fed, and then that'll be the basically buy the bad news, I guess, if you will, and the market then could rally off of that, and then being right around that Christmas time next week, we enter the Christmas rally phase into the year end. Again, that's just a possible scenario. So we'll see. One thing I wanted to actually highlight here is something that, unfortunately, like I said, I haven't done the video in a couple weeks due to circumstances out of my control. But those of you who have seen a couple of these videos, I've been following this junk bond index, and this has been very timely as far as showing the vulnerability, if you will, of the equity markets, and what happened here, I don't know, 2 weeks ago or so, is this thing started to really fall out of bed. As you can see, we've really been in a pretty strong downtrend here since July, and it's basically just been going, again in these high yield, they've just been getting crushed, and they've done immensely well in this last 5 years since the lows of 2009. But now, it may be, that party may be over. And again, at least on a short term, you see, especially a strong move like this, it bleeds over into equities, which is finally what happened this past week. And for me, the tell here, I mean, down here it's a little confusing, but this is basically the spread versus the junk, this index versus the Treasury, I believe the 10-year spread. And the key, though, is not necessarily the spread, but when we start getting the spreads blowing out, which is telling you that the risk off trades is happening. So the treasuries are maybe rallying, and junk is collapsing, which obviously widens the spread. It's telling you there's something, there's a dislocation going on, for me, the first indication was on the 8th of December when this turned red here. And you see that was when this just continued to start the breakdown and where we're at right now. Again, I do have a indicator that this is overdone right now, so maybe what we'll see is a pop in the junk bond index this week, and that again may be the tell on equities. So if I see this thing rally a day or two, I still see volatility in the markets, it may be time to jump in the equities if this does get a semi-decent bounce off these lows here. So again, this is actually done really well to forecast, like I said, the vulnerability in the equities, and it continues at this point. So definitely continue to follow that indicator and that market. Again, the Nasdaq actually has held up quite well, considering compared to the overall market. I think as everyone knows, oil has really fallen out of bed, and that has brought lots of pain in the energy sector and basically the commodity sort of complex of the market. And then, again, Nasdaq has held up quite well, even though that's showing that it's definitely on the VIXR side that we may be close to a bounce as well. So relative strength definitely in the Nasdaq at this point. So I feel like there should be some support here, roughly around the 4,600 in the Nasdaq composite. We'll see how this week develops. So this is definitely an area to look for opportunities potentially if we do get a bounce. Same thing with the Russell, where in the prior collapse in the market, the Russell has usually been the canary in the coal mine. So far, it's actually doing a sort of a consolidation pattern here. So it's actually showing some relative strength over the overall market. So I think that may lead into the thesis of if this is able to hold up in some way, actually potentially lead the bounce into year end if that scenario does play itself out. Of course, this is anything goes, so just be prepared either way. I mean, there's definitely some pretty big support here, and this is the ETF, roughly 114 or so. We're right there. Even if we do bounce, what I'd like to see is a break down below the 114. Get people on TV and whatever commenting how, oh, then the Russell's breaking down. Head and shoulders. I mean, because if you look at it, you kind of do have, here's your left shoulder, here's your head, here's your right shoulder. So, if this does break, we can get down to if we 110, 111. Not the end of the world though, because the key here is that that would actually be sort of 50% from the October lows to the peak. Again, not the end of the world. Maybe a good spot to bounce off if that does occur. If we don't break this, like I said, right now this has actually been showing some relative strength, so I'd be a little hesitant to be selling this, and or if I do, I'm going to have a real tight stop in. So if that breaks, it should never look back. That's my thesis on that one. So that's in a nutshell. Here's the weekly. One thing, since I didn't do a video last week, definitely had an indicator here, a sell indicator on the Nasdaq last week on the weekly, and it's sort of been working out right now. But again, that's even on the strategic level, with the VIX RSI up in here, it's showing me that we may be actually due for a bounce at some point this week. So and here's in the S&P now. It seems like it's a little bit late. I'm getting that sell indicator on the weekly. But again, we'll see. I mean, I'd almost say we're a 90% chance that last week's low gets taken out, and that's actually potentially a good thing if we get, take out that low, maybe get a little a vacuum to the downside, and then maybe a quick flush higher. Get anybody that's been riding this, the weak hands out of the market, and then maybe that will allow us to give us that fuel to then basically reverse. So, but the problem again for me is this whole Fed thing, and again, for me, I'm probably going to sit on the sidelines to sort of watch, see what happens leading into that, and maybe play something towards the end of the week. So that's pretty much all I have. I'm just going to take a look here. We can take a look at high beta. High beta has been very weak, and I'm going to start off with Google. Google has really been extremely weak since the end of the summer. The different, the one that has been strong is Apple, but that also is finally has sort of met its maker up here at the 120. But I think Apple should potentially catch some support here in the 108 area maybe. But again, I'm going to probably wait to see this downtrend here maybe get broken to the upside before I'd want to get involved with that, because I'm not good at catching falling knives. I'd like to see things stabilize, show relative strength, and then get involved. And sometimes that may be after a market has already reversed. But again, I'd like to get in sort of in the beginning of a reversal on some of these, and I just don't see anything right now. The only stock that I see that actually holding up like a kind of a champ is Facebook, but with last week's volatility, it's been tough to kind of hold this one. But right now I think this is definitely a place where money's getting put to work for now. Something to keep an eye out for this week to see if you can fill this gap, and especially if the market does reverse, this may be a place that money goes to work. And the one in that sector that has been a dog is Twitter. But what's very interesting was the breakdown on Monday, and I actually got short this. And believe it or not, covered it pretty much down in here to just above 35 and a quarter. I think I covered. pure luck, of course. But what's interesting here is that Twitter, which has been a dog now for quite a while, really relatively weak, has finally actually closed. The second half of the week has actually done real well. Even though the market ended up on the lows, Twitter's actually kind of stabilized here, and it kind of makes somewhat of a sense because 35, if we remember, was the initial breakout right in here when it after this down move, and I kind of figured 35 would potentially be an area of support, and so far it is. So maybe this is be the end of the Twitter decay, if you will, and maybe it can break this downtrend and sort of do a little bit of repair work here. But again, we'll see how things play out this week. And again, looking for some more high beta, maybe like the place that Baba, another one that has done real well here, but has now been retracing a little bit, but again, not too bad. Had a sort of, if we get a little bit of sideways action here, break this downtrend, maybe then it can make another move towards the end of the year. That's again all I have. I'm really going to be doing more watching this week than trading. Don't have too much risk on at this point, and just going to watch and see. But what's interesting is you see at some point with the way the oil, this is actually an oil producer, approach resources, and this is just painful. I mean, this thing is a stock that's been in the 20s over the summer, and now is trading at $5. I mean, you got to imagine this is in a going out of business sale right now, and companies like this are just, you'll probably see, some of these leverage players just they just can't withstand this oil at a low price, and that's what the market does. It punishes those that aren't prepared, and then that's what will make business stronger going forward when you get rid of the weak. So again, I'm not saying this one's going out of business, but it hits, as far as I'm concerned, when a stock is losing 80-90% of its value, it's pretty much, in my mind, gone out of business. I'd like to see in the headlines some energy hedge funds blowing up, and that might, you see stuff like that come out, or people start saying, $20 oil, we don't need oil anymore, or whatever. I mean, if you start seeing that on CNBC, maybe that'll be the low in the oil market. But all I hear is people telling me, oh, you got to buy oil. This is, that tells me there's probably still some room to go low, and if the sentiment is people still believe oil, belongs at 80 to $90, $100 a barrel. And again, this is what's probably been really paining, beating up the junk bond index, because the risk on this is the contagion. I mean, as far as you hear about the Russia, Venezuela, just two countries to come to mind that are just under severe pain with oil trading down here. But and we start hearing them not being able to make payments on their debt and whatever, and that type of stuff just can cause some bit of a contagion, because whoever they can't repay, and then they can't repay who if they're not getting paid, they can't repay who they owe, and it goes down the line, right? And it's the same for the businesses in this sector, in the energy sector. So I think that's what probably going on right now. People, the real smart guys are figuring out what companies are who hold debt in what companies, and the ones that are at risk, and yada yada yada. So that's probably going on right now, I'm sure. And we'll see how this plays out. So this will be interesting. Just one thing to note is on the dollar index, because that I think has been definitely the wind that's been helping oil go lower because of this dollar strength. I mean, look at this. I mean, so you got to imagine if commodities that are priced in dollars are going to be under some severe pressure when you have a move like this in the dollar. But again, we'll see. The dollar has come off last week, so we'll see if this now, if this starts to enter into a bit of corrective phase. That may actually be the possibility to take the pressure off some of these commodities like oil, who've really been punished here over the last few weeks and months. That's all I got. Again, thanks for watching.